What an awesome week for mortgage rates as CPI, Consumer Price Index, the market's favorite inflation metric, came in below forecast across both headline and core readings. Now, core meaning it strips out volatile indexes like food and energy prices, and it's core that the Fed is paying most attention to. Our core month-over-month reading came in at the lowest level going back to 2021. So definitely a welcome sight across the bond market, providing some healthy improvements across mortgage rates. Now remember, the last few weeks, rates have been getting killed. Incoming economic data has been pointing to a very strong, a very resilient economy, creating further uncertainty that the Fed might need to be even more restrictive at its upcoming meetings to bring inflation down to its 2% target. So this CPI report alone calls into question, it changes the narrative about whether multiple hikes are still needed to bring inflation down to the Fed's target. Now, on Thursday, we had producer price index, another inflationary gauge, came in low, so it was good for rates. However, initial jobless claims, this is an indicator of the labor market, also came in a little bit lower than forecast. So those are initial claims being filed. Did have a little bit of weakness from that. However, Thursday, we did see still some continuing improvements from the CPI report the day before. On Friday, there was some of the highest consumer sentiment readings we've seen in a while, so it did cause some additional weakness. But hey, all in all, it was an awesome week for rates. We still close out the week in much stronger territory than we started. Now, the Fed is still going to hike its federal funds rate, the short-term benchmark rate, at its next meeting here in a couple weeks. It's a 94% probability. But we do expect a pause after that. And at that point, it's just waiting for incoming economic data to confirm that inflation is continuing to cool. Remember, it all comes down to inflation. You have any questions about this week's headlines, about these new rate trends, or if you want to talk about how they impact you or your client's purchase power, give me a call. This is Billy.Saylor, your mortgage professor, 571-330-5884. Have a great week.